Thank you very much. Thank you very much for everybody who is joining, and we just give everybody a few minutes to come in. Remember, this is the BlockCoop webinar. We have this webinar every other month, covering different topics that are relevant to the digital world shift, that are relevant to how we can be able to create digital wealth, and what blockchain as an infrastructure has enabled in terms of digital ownership. So blockchain has enabled digital ownership, as we covered in our last webinar, which is available on our YouTube channel. So if you go to our YouTube channel, you'll be able to find the last webinar that we did, which was about understanding the digital world shift. So today we have an expert in the house. Edwin Sikini, the founder and CEO of Blockchain Technologies, is going to talk about comparing the different trust models between blockchain and your bank account or your SACCO account. He's going to tell you about how control which of those accounts you have control of your funds, and he's also going to talk about how safe your money is, especially within the blockchain networks. So we'll continue to have a series of these webinars. And next month, we will also have another expert coming in who is also going to talk about, is crypto the biggest wealth transfer or just another bubble? So there will always be topics that we are going to be covering. Also, remember next month, we have a physical meetup for all the anybody interested in BlockCoop as a community. We have a meetup at Modaiga Country Club. So Modaiga Country Club on Modaiga Road. We will be there for a dinner. So we'll have a physical dinner meeting there next month. So check out for in our community groups for the registration of that particular dinner. So also there we're going to have a speaker who is going to be speaking to us again on that particular day. But it will also be a very good evening to network and get to meet people and get to create meaningful connections. Of course, the goal is to create connections that are of financial benefit to you, but also connections that can also create friendships and things like those. And that's the essence of the BlockCoop digital wealth community. Also, I want to let know the community that we are heading to Singapore and Malaysia from the October 6th of this year. We have the Token 2049 Expo that we are going to be going there. It's going to be a 7 days trip. It's been organized by Adequate Safaris in partnership with BlockCoop SACCO. And obviously, we are going for the Token 2049 Conference Expo. And then we go, of course, we have some leisure in Kuala Lumpur, and then we'll be back here in Kenya. And of course, that trip, for if you're a member of BlockCoop SACCO, then you have a 30% off on that particular trip. So anybody who is interested on that, kindly go to our WhatsApp community, and we can be able to connect and be able to take you through what it will take you for you to do that. Also, remember next month we are also doing a distribution of our quarterly yields. So for those who are shareholders, they already know they've been making a couple of yields throughout the last quarter. So we will be doing our quarterly distributions next month on that particular day that we are having the dinner for everyone. Then we will have some distribution. So if you want to be part of those distributions, then you can be able to get in and grab your package, your membership package, because we are doing a cutoff on 15th of August to make sure that those who will be in by then we'll be able to receive some distributions by that time. So those are some of the adverts that we'll keep talking about, and I was just taking that time as we allow people to be able to come in. So as I said, we will be having a webinar every 15th of every month, or 15th thereabout of every other month. We are going to be inviting experts in different fields to come and talk to us. We will have different kind of guests. And one of the things that we have talked about is that every knowledge that we acquire, or any new skill that we acquire, it improves our ability to generate wealth, right? So when you know something new, when you have a new when you have new knowledge or a new skill that you didn't have before, then of course you have found a new way of generating wealth. For example, in the 2019, 2018, people didn't know much about money market funds. Then they came to know so much about money market funds, and people invested a lot. Right now, a lot of the rich people are divesting from real estate into those kind of funds. Then of late, after 2023, people now are divesting so much into special CISs. So it's about knowledge. It's about people getting to understand the different opportunities that are out there. But when you get to understand that knowledge, then you are able to take advantage of opportunities and be able to create wealth. And today we have Edwin Sikini with us, the founder and CEO of Blockchain Technologies. Is an expert when it comes to blockchain, is working with the big financial institutions in this country and outside this country, and is delivering compliant solutions. As we said earlier, blockchain is going to be an infrastructure that is going to power financial services. And therefore, whether you like it or not, you will actually run transactions on blockchain. The objective for us as a BlockCoop digital wealth community is, are you going to be the owner of that infrastructure, or are you going to just be a user? And I believe that our objective as a community is to create owners. And because we want to be owners of this infrastructure, then it is important for us to be able to understand how the infrastructure works, how secure it is for both our investments, but also for the users that are using it, and things like those. And therefore, today we are joined by Edwin Sikini, and I think we are 10 minutes into our meeting. This is going to be recorded and it's going to be posted on our YouTube channel. Again, the link will be available to everybody who has joined. You receive a message, even those who will not be able to join, as long as they registered. We have your email addresses. We'll be able to send you an email with a link to the YouTube for you to watch this particular session. And I think it's going to be useful to you. So, Edwin, you're there?
Yes, Gideon, I'm here.
Yes, I can hear you. I think your mic is going to be okay. I think we can start off. The session will be recorded. People will keep joining in. We will post it on YouTube. People will be able to watch it much later. But I think you can take it away, Edwin Sikini. You can introduce yourself and proceed. Asante sana. Karibu.
Thank you, Gideon. Thank you so much. Thank you for having me. My name is Edwin Sikini. I'm the founder and CEO of Blockchain Technologies Limited. Blockchain is a virtual asset risk management firm based in Kenya. We've been around since 2017. We've been supporting individuals, institutions, and other enterprises with respect to matters keeping safe within the virtual asset space. My background is in law enforcement. I also have a background in banking and close to 10 years in virtual assets risk management. So this is a space that is not new to me. And today is quite an exciting day, knowing that we are going to have this conversation discussing about how trust, ownership, and control differs between blockchain networks, banks, and SACCOs. As I proceed, please feel free to share your questions, comments on the chat box so that we may be able to respond to them. I have a preference of starting the trainings I conduct with respect to, first and foremost, initiating or bringing us to speed on what virtual assets are, what crypto is, what you know virtual assets, digital currencies are. And I always love giving the story of how money evolved because it is only important for it over the years to where we are today. Now that we are talking about non-physical forms of, ownership in terms of money, and we all know that we once had barter trade. I'll call it Stone Age. I don't want to give it a timeline. We had barter trade for the longest time, and at some point, we saw what we call the introduction of commodities or other items within different economies. And the whole idea was to support trade. Remember, the bottom line of any ecosystem with respect to trade is making money. So we saw cowrie shells being used. I think the people back then realized walking 500 goats to go get 100 cows, I'm assuming the ratio was 3 goats, 1 cow, was a bit cumbersome. So they introduced cowrie shells, they also introduced salt, and many other types of commodities that were supporting trade in that day and age. Fast forward to around when we had the Roman Empire, we got the emperor, his name was Julius Caesar, who introduced silver coins and gold coins. And the silver coins and gold coins were quite, welcomed within the society. I think gold, courtesy of its shiny, elements and longevity, unlike salt, which you would carry, should it come into contact with water, you've quote unquote technically lost your money. So that evolution of moving from salt, cowrie shells, and barter trade to gold coins and silver coins was another key steps that drove us to where we are today. And then, of course, a couple of years, hundreds of years, because these evolutions happen over time, and there are factors that actually support the evolution of money. We had paper money introduced. I remember I visited one money museum. I think it was in Switzerland, and the first forms of paper money were very big. They were like the size of A4 envelopes or A4 papers. They were quite big. And that being the case, would realize that, storing them or even trading them, they were not easily acceptable at the very onset. More or less the same way we had virtual assets being introduced, crypto, and so on. But they never ended up being used for, they never got that particular traction. And as we proceed, we are now seeing more inventions within the digital aspect space. We are now seeing elements that have digital money in them. For example, in Kenya, we have the advantage of what we call M-Pesa. It is quote unquote a form of digital money. But then, does it really meet, global adoption? We know M-Pesa is just a Kenyan product that we are currently using. And one of the things, or three things that have really contributed to the adoption of virtual assets, digital currencies, cryptocurrencies, is the fact that we are currently living in a digitalized age. We have three factors that support what we call digitalization. Number one is electricity. We never had electricity, adopted across the globe as it is right now. Number two is computing power. I am sure as I speak to you, we have very few people who are currently using Nokia 3310, And number three, we have the internet that has enabled global connectivity. So those three factors, electricity, computing power, and internet, have actually enabled innovation around the development of digital or virtual assets. And to be very honest, you and I both, we spend a lot of time on our phones. We make a lot of transactions, using our phones and our mobile devices. I think the last time I saw people transacting, in paper money, in bulk, was quite some time back. Everybody nowadays is either swiping or paying using M-Pesa. So appreciating the evolution of money will help us acknowledge digital forms of ownership shares, whether they are, Bitcoin or other types of virtual assets that have a particular use case in our society. And when the first virtual asset was developed, I think it's important for us to appreciate that Bitcoin was the very primary virtual asset that was developed. That was around 2009 after the white paper was developed in 2008. And the way Bitcoin was developed is that it was developed on an open source code. For those of us with small technical understanding of what open source is, it basically means you can take that code and create your own virtual asset. So you can see in this screen that I'm currently sharing that after Bitcoin, a whole lot of thousands and hundreds of thousands of virtual assets were actually created from Ethereum, Cardano, Tether, and all had different use cases. Most importantly, or the most important thing for me to point out in all this is that most of these assets, or all of them actually, were developed by private entities. So that is why around 2009 to around 2015, there was a lot of resistance from governments and, particular jurisdictions on accepting or adopting virtual assets. Another element that really made Bitcoin specifically, I'm really starting with Bitcoin because it is more or less the mother of all virtual assets, is that the primary use cases for Bitcoin in early 2009 towards 2014-15, it was the preferred, please excuse my network, it was the preferred mode of payment, but primarily it is criminals who adopted it first. You'll find that we had a dark website called the Silk Road, where all types of illegal business was happening, whether it is weapons, child trafficking, and so on and so forth. So what happened is that started providing use case. Of course, other people who understood what Bitcoin was went ahead to invest or to buy and keep their virtual assets for purposes of investment. And that use case by criminals is what really propagated governments banning, Bitcoin and virtual assets back then. But the technology behind the development of virtual assets, specifically Bitcoin, which is now what we call blockchain technologies, is very solid, is very critical, and has more than 1 million use cases. As a matter of fact, from where I sit, blockchain technology, not cryptocurrency, blockchain, the technology is all industries. It is very solid in agriculture, it is very solid in transport, banking, you name it. Whichever industry you are in, just chat GPT or Google the relationship of whichever industry you are in and blockchain technology, and you'll be able to see that. So once these private entities started developing more and more digital assets. I'm sure right now you are aware that even the president of United States, his name is Donald Trump, developed his own coin called Trump coin. That basically means you can pick that open source code and develop your own coin. So that is what propagated a lot of coins to come into the market. And of course, all these people who came into the market had goodwill and probably experienced one or two challenges. And of course, we had bad players along the way who took advantage of this new technology and started the same way. When gold coins or silver coins were introduced, there are some people who are collecting stones and carving them nicely like coins and painting them, color gold or silver. And people lost money. Same thing as paper money. We've seen people creating counterfeit notes. So there are a lot of other virtual assets or cryptocurrencies or digital currencies that were developed back then and are currently being developed because remember, the Bitcoin blockchain network is an open source code. However, coming back home, just to bring you to speed with respect to how we are doing, Kenya is actually ranked at number 4 from a global point of view with respect to virtual assets adoption. That basically means we have moved very fast. And if you look at those 3 things I mentioned earlier that really propagated the adoption of virtual assets globally, not just in Kenya, you'll notice that the 3 things actually stand out in Kenya. We have very solid electricity in Kenya. We have very solid um, internet as compared even to other global countries in the world. We have very solid mobile penetration devices. Even my grandmother has an iPhone. So that iPhone or that mobile device is what is called computing power. So we are more exposed as compared to other regions or other jurisdictions when it comes to adoption of virtual assets. We have almost 4 million plus estimated virtual assets users as we speak in Kenya. And they have transacted an estimated 7 billion annually in terms of volume. And the predominant mode of engaging in virtual asset currently as it sits is through peer-to-peer trading. I have crypto, I want to convert it into Kenya shilling or United States dollars. What do? I find a platform, and we'll be talking about that, basically an exchange where I can off-ramp my virtual asset and receive fiat currency, Kenya shillings or United States dollars. So you can clearly see that Kenya is a leader from a global point of view when it comes to adoption. In the whole globe, we are almost, I think we perambulate between position 15 and 20, but we are doing so well. We are doing so well such that as we speak, we currently have the Virtual Asset Service Provider Act 2025, which was signed, the bill was signed into an act last year, October. So we are at what we call the grandfathering period, where companies or entities that seek to acquire and provide these virtual asset services, whether it's an exchange, whether it is ICO issuing new tokens or otherwise, they are doing what? They are now currently applying for licenses. We have the Central Bank of Kenya and the Capital Markets Authority as the designated regulators within this space. So we can clearly see that we have a significant number of virtual assets adopters in Kenya. And what does that speak? It speaks volumes in the sense that we are better positioned and we are still very early in virtual assets. I am really, really happy about BlockCoop SACCO because these are leaders that have thought way ahead of the curve. And that is the way to go, because the current conversation right now is on tokenized bank deposits, or even acquiring shares in the form of uh, digital assets or virtual assets, which can be traded globally. Once they hit a global exchange, your assets can be converted and you can trade them from a global point of view. Now, following that, it's also important for us to note that when I mentioned that Kenyans are ranked highly in terms of virtual assets adoption, this is an extract from one of the leading newspapers in Kenya. You can clearly see that Kenyans, especially those from the diaspora and even in Kenya, we ranked fourth in stablecoin, use in Africa, and we spent almost 426 billion. Those are mind-boggling figures. 426 billion Kenya shillings in terms of that particular trade. So this basically paints a picture, of where we stand and where we sit as a country when it comes to virtual asset adoption and use. Feel free to share your questions in the chat box, or comments, or even ideas. We are all learning. As I mentioned, the virtual asset space is very green, and we are all in this because we believe in the future of money, in the future of ownership, in the future of, how we secure and invest our hard-earned money. And now this other slide is quite an interesting one, because in this slide, we can see that over 3.6 million cryptocurrencies or virtual assets have died since 2021. Now, what does that speak? What does this imply? This is quite important for us to note. And the reason why over 3.6 million cryptocurrencies have died is because when we look back at when virtual assets started, and that is back in 2009 when Bitcoin was created, or that innovation came about. I mentioned earlier that the Bitcoin blockchain network was built on an open source code, meaning as Sikini, I would have taken that code and developed my own cryptocurrency. I would call it maybe Sikini coin, and probably, market it out there and mention how this Sikini coin is going to be used for intra-Africa trade and so on and so forth. But then most of these cryptocurrencies that died failed to pass what we call the decentralization test. Basically meaning, if you are developing a virtual asset, it means the whole idea is for it to be adopted from a global point of view. One of the use cases. And should you fail to put in place infrastructure that supports this particular virtual asset from a global point of view, then it means the people who have invested money into your virtual asset will not have, reasonable ROI, because the adoption of that particular virtual asset is localized within a particular jurisdiction. Number two, many also were developed from a scamming perspective, because if you look at the investment appetite for people from a global point of view, we have what we call the greed and fear index, the greed and fear index. So when something new hits the market, but you are not sufficiently and reasonably informed on the risks or opportunities, if you are too greedy, you jump and invest or buy those particular without proper information. That is why I really applaud BlockCoop's SACCO. they have a series of informing their clients and even Kenyans or even the world in general. I mean, we are having this virtual asset session webinar, and anyone from anywhere can listen in and share their 2 cents or learn something, one or two things that can help them. So most of those cryptocurrencies that died, you find that they were probably uh, developed to scam people, and I'll be demystifying what scams are and how to identify genuine, virtual assets, platforms, or otherwise. So most of them died because there was no number two regulation, because Bitcoin was really new and virtual assets was a very new concept. Very many governments or jurisdictions had not put in place regulations or laws governing the use or adoption of virtual assets. And we are very lucky as Kenyans, extremely lucky. We are among the few countries in the world that have progressively moved with speed to develop virtual asset regulations. I mentioned earlier, we now have the Virtual Asset Service Provider Act 2021. And most recently, that was around April, the Treasury issued what we call sub-regulations for regulating individuals or entities that want to, acquire licenses. In those sub-regulations, you have customer protection. I'll mention one element. For example, if there is someone who wants to sell crypto in Kenya, they now need to be licensed. They now need to have a physical office, somewhere you can literally walk in and, and have, or rather inquire and get information on that. Number three, there are customer protection elements that have been embedded, such as capital requirements for these companies before they start rolling out their products. Number three, most of these virtual assets that died, you realize that they were developed by synonymous people. You look at the website or that particular platform, they don't even have a team behind it. But we have BlockCops that has a, you actually know Gideon. You've had there's lots of capacity building that is happening. They'll be going for a trip in Singapore. Those things never happen. These are genuine people who are developing their business from scratch, and they have goodwill in terms of the investors who will put their money behind those particular ideas. So the reason why most people lost money is because of the greed and fear index. They were too greedy. They did not inform themselves on what, from basic things such as, getting to know a white paper. A white paper is a document that basically describes, that particular virtual asset, what they do. Now, like at this point, I will encourage and challenge you to look for the BlockOps white paper, which is properly detailed in terms of what it does and so on and so forth. At this juncture, I would like to break down, because there is always confusion between blockchain and cryptocurrency. At times, you find that people are interchangeably using the terminology blockchain, and at times, they also use cryptocurrency. So it's important for us to know that blockchain is the infrastructure, and I think Gideon stressed on that, is the infrastructure underlying and supporting the development of other assets or virtual assets or digital assets on top of that particular network, decentralized network. Now, one of the most outstanding and safest security feature for blockchain technology is the decentralization nature. I'll give an example. Let's take Bank X, for example. Bank X provides services to its customer. It has its core banking system embedded or archived in their servers at their headquarters, assuming it's Nairobi. Of course, courtesy of business continuity, they have another server, the DR server, and so on and so forth. However, that particular system is technically a centralized system, basically meaning should anything happen on that particular core banking system, on those servers, both the DR and the main server, because they're basically two, when it goes too far, maybe three. If anything happens on those three servers or those two servers, that particular bank is not able to support its customers completely, completely. However, when it comes to blockchain technology and the concept of decentralization, what this means is that you have the same data set, the customer data set, the customer database rather, not data set, the customer database that is decentralized such that you have a copy of that T24 or that customer database in all branch network servers. So they're decentralized, meaning should any branch suffer, for example, power loss, the other branches will continue serving customers unhinged. If the headquarters or the main server is suffers, for example, a cyber attack, the rest of the branch network will continue to operate and they will only cut off that one branch until it is sorted and it is up and running. So that is one of the key, characteristics of blockchain technology, decentralization. So you have a database that is copied on very many other servers for purposes of ensuring continuity. Now, cryptocurrency, on the other hand, is basically a product that has been developed on top of a blockchain network. So it's a virtual currency used in transactions on blockchain. So it is, in other terms, we call it I call it digital currency. Some people interchange it with virtual assets, cryptocurrency, and so on and so forth. So decentralization is the key element. Blockchain is the infrastructure, the underlying infrastructure. Crypto is just a product. So you can actually develop very many products on top of blockchain other than crypto. As a matter of fact, in my own understanding, crypto is like 25% of what blockchain technology is. You can use blockchain technology for agriculture and many other use cases. At this juncture, I'd like to mention a few things. I think I did mention on why people were investing and losing funds. And we can see that any new technology, as I mentioned, just the same way when paper money was developed, and even up to date, people are still trying to make counterfeit notes, This technology, because it is anchored basically virtually, that is online, it is exposed to very many types of crypto scams and cyber security threats and risks. We have malware. I'm sure most of us have seen links that have been shared, to our either WhatsApp or your email or otherwise. And when you click on that link, it happens to crash your computer or, siphon very important data and so on and so forth. We've seen fake ICOs. An ICO is an initial coin offering. It is more or less the opposite of an ICO. So in today's world, we have ICOs, initial public offers. That basically means a company has grown over time and it has gotten to the point where now they want more capital into the business to expand and, have, expand their network or their products or for whatever reason. So they ask for an IPO. But in the crypto space, ICOs were basically designed for investors to put in their money once they have done their homework and are convinced that this particular project is very feasible, so they put in their money and they get coins or virtual assets in exchange. The same way, if you put in your money in an IPO, what you are given is a paper document, a certificate, a share certificate to show that you are a shareholder or you bought shares of this particular firm. But in this space of virtual assets, when you put in money in an ICO, initial coin offering, you are buying into the promise of that particular institution or business, and you are getting virtual assets. Now, the beauty about acquiring or investing and getting your digital assets is that once this institution gets to grow, you don't need a broker. You don't need to go back to a broker the same way when you have shares, physical shares. You need to go back to a broker, you sell, and you wait for 2 or 3 days. If that project kicks off and peaks and becomes successful, just the way I see BlockCops will be very successful. If you buy BlockCops shares today, for example, 10 years down the line, you won't need to come back to BlockCops office or look for a broker. These shares will be traded globally in global exchanges, and you'll be managing them from your wallet, your digital wallet. So off ramping or selling these uh, assets will be very seamless and fast. So a lot of fake ICOs happened. People are bringing about stories. There was actually one called Nuru Coin in Kenya. I don't know who heard about Nuru Coin. They were, it was just a lot of noise around. Maybe they had goodwill, but they did not put the blockchain infrastructure in place for, mass adoption. We also have Ponzi schemes. We've seen those investment schemes. Kenyans are not new to this. And I mentioned earlier, one of the challenges is our greed and fear index. If your greed is too high, you jump into an investment and you don't understand. We have pump and dump schemes, which you buy a token or you invest in a token, you see the price has gone up, 100x within 2 days. You put in 1,000 shillings, in 2 days it is, 2,700. You get excited, you bring in more money. By the time you want to withdraw your funds, the token has actually crashed, or it crashes and you are left with losses. And scams have been very prevalent. And the reason why I'll be talking about them is because we need to, differentiate between genuine, because now we have regulation. We now have companies that are very genuine, that have been in the market with experienced people, who are doing things that are not only beneficial to the investor, but also for us as a country. I mean, if we are able to put our efforts into this particular space from an informed perspective, you will realize that the returns, the biggest and smallest, the simplest example I can give is Bitcoin. Anyone who bought Bitcoin or invested in Bitcoin in 2009, Bitcoin was practically 0.001, less than $1. Today, we are talking of Bitcoin being 60 something. As we speak, you can actually Google or ChatGPT the price of Bitcoin. It was less than $1. Right now, we are talking of 60 something, keeps on fluctuating the volatility and whatnot. But I mean, it will never go back to zero. And that is the same confidence BlockCops and many other genuine virtual asset, service providers are bringing out here. So when we talk of scams, we are looking at, quite a number of scams. We have identified around 11 scam typologies that have been within this market, even from a global point of view. And it's very important for you to understand these scams, because we are not saying that even past regulation or operationalization or licensing of virtual asset service providers. Scams will cease and will not be around. I mean, paper money was there. We are seeing to date people are still trying to print or make counterfeit money, you know. So that is very important for us to understand and appreciate this. One of these, excuse me, these types of scams have been alphabetically um, illustrated. So some of these have not happened, but it is important for you to understand these things because they happen. They have not happened yet. For example, when you talk of address poisoning is, for those of us who have had the benefit to interact with virtual asset, you notice that an address is more or less of a bank account, is what we call a bank account. And it comprises of a string of characters, alphanumeric characters. They are letters and symbols, and numerals. And what is happening when we talk of address poisoning, you find that when you want to send someone money or you have been in constant transactions with an individual, because this address is quite long, those alphanumeric characters are like 24 or 12, depending on the type of wallet you are using. Someone can alter just one element. It is more or less like what we call business email compromise. You know that type of scam where you receive an email from, let's say, Sikini at Blockchain Tech, but then someone just registers a domain, and it just changes one character. It changes the whole destination of that particular email. So those are some of the current scams that are happening. People are corrupting other people's accounts, addresses, and siphoning. We have ATM scams where they put in place ATMs and say that they are selling Bitcoin or virtual assets from ATM. So the moment you go buy virtual asset from that ATM, they steal your data and they sell you, fake coins. So when you want to convert those coins, you find that you actually did not buy genuine virtual assets. We have deep fake authorization scams. We've seen people cloning faces, cloning voices, and giving authorization. We have donation scams, and these are actually very dangerous because you might be a holder of virtual assets wanting to donate to a justifiable cause, but you end up even donating to terrorist organizations without your knowledge. And that will put you in a lot of trouble. The reason is blockchain technology is immutable. So every transaction that happens on a blockchain network cannot be changed. We have incentive-based scams. We have phishing and ice phishing scams. We all know what phishing is. We also have pig butchering. Now, this has been the biggest scam lately. So, pig butchering scam is more or less of an investment scam. We've seen people circulating links on WhatsApp, telling you to register and download a particular application. So the moment you download and have that application, what happens? You deposit your funds, say 500 shillings, 1,000 shillings, and in the evening, that 1,000 shillings, when you deposit in the morning, is 1,700, and you are able to withdraw. When you withdraw those funds, they are actually social engineering you. You get more confidence. You bring more money. You put in 3,000 tomorrow. In the evening, it is 6,700. You are able to withdraw. And then they start giving you, conditions. Please introduce more people. You'll get a commission. I'm sure as Kenyans, we've come across those conversations. And I have friends who have lost a lot of money. And the reason why it is called pig butchering is because the idea is, it's a pig. you fatten it before you butcher it, before you slaughter it. So they keep on fattening you, you know. You bring in now 10,000 shillings and you loop in your friend, you share that link on WhatsApp or Telegram or whichever channel, and they start doing and repeating the same. One fine day you try to withdraw, you are told you cannot withdraw until you get to a particular limit. So you are forced, or you know, under those circumstances, required to now put in some more money in that particular platform for you to acquire funds. So pig butchering is the most prevalent. We have recovery scams. People are telling you you've lost your crypto. We are able to recover for you. You end up paying in advance, but you're not able to recover because the nature of this virtual asset space is that it is global. And we are now seeing more and more criminals from a global point of view who can easily attack this jurisdiction from another jurisdiction. We have like the North Koreans, the DPRK, you know, scammers. They operate, I mean, the internet has removed borders, so it becomes easy for them to attack. From a global point of view, we've seen Bitcoin and other virtual assets being a preferred mode of investment. And this is more or less of a snapshot from the Bitcoin Policy Institute and Kano Bitcoin Club. I'm talking about Bitcoin because that's the mother, but we have shares like the BlockCoop's token, which is actually listed. It has passed the test, and these are some of the items or virtual assets that we need to look at. Home-based, once licenses are issued, these entities are, you are able to walk into their office and inquire, get information, and so on and so forth. I mentioned on centralization, the infrastructure, which is very important for us to understand the concept of centralized and decentralized. You'll notice that in the long run, even blockchain technologies will be adopted by financial institutions. I'm already, personally, from where I sit, I'm already having conversations, providing guidance and consultation with a number of financial institutions who are now looking into this. Because if we will encounter a cyber attack as a bank, and we have a blockchain network, it means we just need to cut off that particular branch that has suffered that particular incident and continue serving and supporting our customers. There are different types of blockchain technology, which we basically call distributed ledger technologies. You find that we have public blockchain technologies because remember, this technology is open source, meaning if you are a participant in that particular network, you are able to see everything everyone is transacting or dealing in. So that means it brings a concern with respect to privacy. We recently got our data protection regulation because nobody wants, I also don't want you to see that I went to some place, bought nyamachoma, 2 beers, we might be in the same church, you start judging me and so on and so forth. So we have different types of blockchain networks, blockchain technology rather. We have public blockchains, permissionless, the likes of Bitcoin. We have private, we have hybrid, and we have consortium. They all have their different advantages, disadvantages, and proper use cases. For example, when it comes to financial institution, a consortium, blockchain network or blockchain infrastructure sits very well for that particular industry. When it comes to hospitals, in terms of safeguarding or safekeeping medical records or real estates, we have the hybrid infrastructure. There have been a lot of conversations about our title deeds, being secured under blockchain technology. This is where that comes in. So the use cases for the infrastructure are quite immense. They are quite immense. They are not the innovations around blockchain technology cannot be restricted or restrained to one particular element. And that is why BlockCops and blockchain technologies have today partnered to ensure that we learn about Web3. Web3 is basically blockchain or distributed ledger technologies. Ownership in the digital age, are you possessing an item or are you the owner? When you look at the bank ecosystem, and it's currently very safe, courtesy of regulation and all that. But where are we going into the future? We've had instances where banks have collapsed and you are not able to withdraw your funds. Now that changes 100% when it comes to virtual asset space. Because at the end of the day, with virtual assets, you have what we call the keys. Keys are basically passwords. No one can touch or move your virtual assets without your authority. And we'll be looking into that in the next couple of slides. So it's also important in terms of financial literacy. I mean, money is evolving. I started by giving the story of how money has been evolving. We started doing barter trade, we went to gold coins, we went to paper money. Now we are in digital money. It's important that people know how to save, how to invest in this new digital money. We also need to champion. There are new careers in this particular space. There are lots of innovations and opportunities you can write on and work on. Back to banking. What are the use cases of blockchain in the banking ecosystem? This is very, very important for us. And these are some of the conversations that I'm having with some of the financial institutions that are preparing to actually acquire a virtual asset license to provide different types of services such as custodial. You might want to have your virtual asset safeguarded in a bank. The same way you take your money and deposit it is the same way if you have virtual assets, you can take and deposit in your wallet, and the bank will actually safeguard it in their vault, their virtual asset vault. The advantages are immense. There is increased security. Blockchain technology is not hackable. You can breach someone's device and siphon or acquire their access credentials, but you cannot hack blockchain. Blockchain is unhackable. It improves efficiency. It increases transparency. We are able to see, when funds are moving, who is receiving what, but remember the different types of blockchain technologies. We have the consortium blockchain, which is very good for banking. So even if it is transactions, they are only visible within the people who are within that particular blockchain network. There is a lot of use cases for banking within the virtual asset ecosystem. Other than that, they reduce reliance on intermediaries. In my earlier slides, I showed you how Kenyans, specifically Kenyans, have adopted virtual asset peer-to-peer trading. We are doing over 7 billion annually in volumes. For your information, that is just peer-to-peer trading. There are other very many use cases of virtual assets. We saw over 420 something billion Kenya shillings has been, remitted either as a form of payment by use of stablecoins. Now, a stablecoin is a type of cryptocurrency that does not fluctuate. It is pegged on a fiat currency. So whenever there is volatility in the market, the value of that particular crypto remains the same. So even if Bitcoin goes up or other virtual assets go up, that one will still remain the same. It is best used for matters trade. So banking, SACCOs, all financial institutions, the moment they onboard blockchain technology, they automatically increase the security levels of their customer deposits and customer funds, which will be technically be tokenized. So we have what we call tokenized customer deposit or customer tokenized funds. So which is a very new concept, but very timely with respect to where we are. The virtual asset ecosystem involves a number of players. We have centralized exchanges. If you've had the opportunity to read the Virtual Asset Service Provider Act, you realize that at some point you need to convert your virtual asset into fiat currency or vice versa. That is where exchanges such as Binance and the rest come in. We also have a concept called unhosted wallets. Remember the whole concept of Bitcoin, because for us to appreciate where we are today, we need to know why was this thing created in the first place. I mean, we still have money is doing so fine and so on and so forth. I'll take you back to early 1970s when the United States gold standard was dropped. I think that was President Nixon back then. So what that did to money is that government now started operating on a trust base. Initially, the United States dollar was backed by gold. But then, once that gold standard was removed, we were exposed. But then, the United States dollar had already been adopted globally, heavily. During the industrialization era, they used to move across the globe with their dollars and acquire raw materials to take back home. So a lot of United States dollar has technically been adopted and is now the global reserve currency. Now, what does that mean? Anytime the United States has an economic shock, like what happened in we had a global financial crisis courtesy of the United States, whatever was happening, and it was not the first. That is how the developers of virtual assets, specifically Bitcoin, came about and started developing I can see a comment from one of the participants, that is Arthur. He's mentioning that my screen, can anyone else confirm? Gideon, confirm.
We can see the screen. Yeah, we can see the screen, Edwin. I'm not sure.
Awesome. I think Arthur, maybe your internet is lagging. Might want to refresh it so that you are able to catch up with where we are. Thank you for that thought.
Because I can see you are on the virtual asset ecosystem.
Awesome. Yes, that is where we are.
Okay.
So as I was explaining or stating earlier, we have an ecosystem that supports this virtual. We have the unhosted wallets, we have decentralized finance protocols, we have P2P platforms. I've spoken lots about that. And then because of ensuring that this space is also regulated, we have blockchain analytics, and that is what we basically do at Blockchain Technologies Limited. We monitor wallets that are not or are, exposed to money laundering and or otherwise. So just to cement the technology, the terminology blockchain is actually derived from the concept of securing data within blocks. So all those transactions that happen, they are secured within a particular block. And then they interconnected, to another block. So each block is secured with a hash. In a layman's language, a hash is like that M-Pesa code, Whenever I send you money and I have the M-Pesa code, that is why if you look at how even M-Pesa agents or when you pay for M-Pesa, how they used to the record, initially they will record your number, your name, but then over time they started just taking that particular code. So It is more or less like a chain of digital locks, and that is what assures and gives confidence on the security of blockchain technologies. So if you acquire your shares today at BlockCoop, for example, the token, you can be less assured that that transaction that was undertaken in that particular block is locked and no one else can move your assets whether they like it or not. The only way you can lose your assets if you don't put security for your devices now, because the blockchain cannot be hacked. It is your phone or your devices that can be hacked, and you can end up losing your assets because of the access credentials being phished from your asset. Um, we are demystifying this. There are people who have been talking about you cannot tell who is behind. These virtual assets are used by criminals and so on and so forth. That has changed, courtesy of regulation. Part of what institutions that grew within this space started doing is requiring individuals to provide KYC information. So over the years, and even when you look at the Virtual Asset Service Provider Act, over the years, we've seen increased scrutiny, especially when onboarding. We've seen increased scrutiny on transactions because bad actors have also jumped into this particular space. You know, they thought there is a lot of anonymity within this particular space. But interestingly, since this blockchain infrastructure is immutable, all transactions can actually be seen. And that is why when you look at the United States, I'm referring to them because they've moved forward with quite a number of legislations to safeguard their customers. They are now actually investigating and arresting traditional crimes that happened in 2015. Because if you acquired Bitcoin through malicious ways, you scammed people and you stored your Bitcoin. In 2015, Bitcoin was $400. Today, Bitcoin is $60,000 plus, keeps on fluctuating, plus or minus. You realize that if you scammed people 500 Bitcoins, today those assets are worth millions of dollars. And the moment you start moving them to a different wallet, they start tracking you. That gives you confidence now as an investor. When you hear that your bank or your SACCO is using blockchain technology, then that gives you a lot of confidence because it means the probability of you losing your funds, especially now that we have regulation, becomes very minimal. Number two, tracking, tracing, and recovery of those assets becomes very easy. We've spoken a lot about blockchain. It's important for us to mention about wallet. I mean, when you have money, you always keep it in your wallet. So there are different types of wallets within this particular space. We have web wallets, we have mobile wallets, we have desktop wallets, and then we have cold wallets or hardware wallets. These are different types of wallets that you can use to store your virtual assets. The web wallets are basically hosted by an exchange. Mobile wallets, these are very important, especially now that mobile penetration and mobile device adoption is global. And you know, mobile phones have the capacity, the computing capacity to host these particular wallets. Wallet is a whole topic for today. I'll just mention the different types of wallets. I'm sure we can always have contact, or through BlockCoop, you can always have that particular information. This brings us to our last slide, basically Q&A. I'll be happy to have Gideon moderate the Q&A session so that we're able to respond to any questions that may come about.
Thank you. Thank you very much, Edwin. This has been a great session. We've really learned a lot today about blockchain. You've done a very good chronological sequence of where things started to where we are today, and you've explained clearly what it means when financial institutions like SACCOs, banks adopt blockchain technology. You've also touched on the regulatory framework that is now in place to make sure that people are actually protected from the scams and all these things that actually happen. So I think you've demystified the fact that a lot of people have really lost money when it comes to deal with cryptocurrency. Cryptocurrency is just, as you said, is one of the products that leverages blockchain technology. And it's a similar scam that would happen in any other trade. People get scammed every day in coffee. People with the cartels, people get scammed. Scams are in every industry, and we also have cybersecurity issues in banking, where you are phishing in crypto and stuff like that. So really, these things are just standard, but clearly, blockchain brings an element that provides more security and control to people and customers of financial institutions when transactions are actually performed on the blockchain. It also brings the aspect of distribution. You become global immediately the moment you deploy on the blockchain. For example, BlockCoop SACCO is a global SACCO. We are a global community. And therefore that becomes very, 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 very good. Yes, I want to answer Eric. Yes, we will share the recording. It will be uploaded on our YouTube channel. Even our session last month was also shared. Yes, we will share with you a link tomorrow on email for you to be able to access that. Stephen, also, yes, so you'll have the recording with the slides and all that. So I would go very quickly to questions. If any one of you has any question, then you can be able to do that. So we have two questions, Edwin, for you from David Kitau. And I know we also have a couple of other questions that are coming in. Please type in your questions. And if you want to speak, you can also be able to speak. You can go with those two. Based on the act you mentioned, does Kenya have authority that regulates cryptocurrencies or the marketplace to protect investors? That's the first one from David. The second one is, can you talk about NFTs? They had been pushed aggressively back then, but they seem to have cooled down. Edwin, those two questions from David.
Thank you so much. Those are very solid questions, David. I would like to bring you to speed on where we are with respect to regulation. Indeed, we have the Virtual Asset Service Provider Act 2025. And this act, what it has done is that it basically acknowledges that Kenya is a country that has adopted and is using virtual asset, cryptocurrency, digital assets, specifically virtual assets. And it also confirms and identifies that indeed we have exposure points that need to be managed. There are two institutions or regulators that have been mentioned in that act that have the responsibility to safeguard Kenyans or this particular marketplace. The first one is the Central Bank of Kenya. The second one is the Capital Markets Authority. Now, in April this year, the Treasury Department issued sub-regulations that now detailed requirements for virtual asset service providers within this particular jurisdiction. For example, number one, assuming you are a stablecoin issuer, we saw over 420 something billion has been transacted, whether as payments or settlements through stablecoins, a type of virtual currency or cryptocurrency. They have said if you are providing that service, you need capital requirement of 500 million. Before you start that business, bring us 500 million, put it in a fixed deposit, and then look for another 100 or 200 million for you to do operation. Now, that money is designed to safeguard customers should they have any or experience any loss. So yes, we have the Capital Markets Authority. Another example of a requirement that has been put for virtual asset service providers, and you need to note very well, They are not regulating crypto assets or virtual assets. They are regulating service provider. You cannot regulate, I mean, Bitcoin was around, these virtual assets have been around. Governments tried to ban them. I mean, if you have internet, you have proper computing power, and you have stable electricity, you connect to the network and you start trading or buying or investing. So these regulations are actually regulating people, or not people, service providers who will be either providing stable coins or custodial services or issuing new tokens. I mentioned blockchain. The Bitcoin blockchain network is built on an open source code, meaning you can take that code and build David coins, you know. So those are the two regulators, the two authorities, that is basically Capital Markets Authority and Central Bank of Kenya. So I will encourage you to find the VASP Act and the subsequent regulations that were issued by Treasury so that you bring yourself to speed. The second question is about NFTs, non-fungible tokens. They had been pushed aggressively back then, but they seem to have cooled down. Now, that's a very interesting perception. No, that's a very interesting observation from your end. Now, what I want to say is very, I'll put it as, how do I put it? Let me put it in the simplest context. Blockchain is the technology. You can develop 1,000,001 products on top of blockchain. You can develop NFTs. You can develop cryptocurrencies. You can tokenize real-world assets. You can actually convert a block of apartments or a tea farm or a coffee farm into tokens, and you put them on a blockchain network. Now, NFTs, non-fungible tokens, were digital representations. You know, for example, you would convert the Mona Lisa portrait and have it now in a digital form, because currently it is physical, maybe in a museum or in someone's home, very safe and secure, you are not able. But then what happened is that most of these innovations, in my own opinion, they are way ahead of time. NFTs, we also have something else that used to be called, I'm trying to remember. Meta really pushed for it. David, you can help me on that. It was Metaverse. Yes, it was called the Metaverse. The Metaverse and the NFTs were, in my opinion, innovations for the future. You know, because the metaverse was basically like NFTs, bringing connection of individual. You create your own anime or character within that metaverse platform. You can literally walk to the market, get into your car, but then it was using a lot of computing power, you know, but people were still able to do these things without necessarily doing them from a virtual space. So if you look at, there's a terminology in crypto called shilling, like our Kenya shilling, Google shilling. So what most of those crypto did that died, including NFTs, but I'm sure NFTs will come back at a later point. But they were just way too early in this particular space. I hope that answers your question. I can see another question from Eric. I mentioned about taxation. Now, this is quite interesting. I'm not an expert on taxation. However, I'll share my 2 cents. We have had a roller coaster when it comes to taxation of virtual assets. I remember the first proposal was in the finance bill of either 2024, where they had proposed to tax every transaction. I think it was 1.5. And it was not making sense, because at times you might be, quote unquote, a trader. You are trading, you make a transaction, you lose money, but you'll still be required to pay. So that one was scrapped. Currently, we are at a point where they've proposed a turnover tax, if I'm not wrong. Gideon, I want you to help me on that. I put a disclaimer, I'm not a tax expert, but there is a reasonable taxing regime within the proposed finance bill that is currently, I think it's either 10 or 15% excise duty or something. I need to confirm on that, but
Yes.
that's an basic question. I need to look into
Yeah.
it.
You're very correct, Edwin. The current regime, where the regulations that are in place are provided for that digital assets will be handled, especially by financial institutions, the same way they handle money. So, for example, if banks are transacting USDT, then they will be able to charge those transactions the same way they charge any other FX transactions. For example, if they are doing on-ramp and off-ramp for you, then they will be charging the same way they are charging their current FX, the exercise duty that they currently charge. But I don't think there is a bracket tax. It was removed, completely removed, the 1.5%. It was 3%, 1.5, then it was completely removed. So that doesn't apply again. Again, on tokenization of real world assets, they are going to be handled. Capital gains will be handled similar to the underlying assets. So the way the underlying assets are handled in terms of taxes, that's how the tokenized versions will still be able to apply. So taxes will behave in a similar manner. Yeah. So we have other questions coming, Edwin, from other platforms, and I think Kelvin Mutambu, you are checking up our other platforms and the questions coming in. Please throw them to Edwin.
Oh yes, thank you so much. Thank you so much, Edwin, for that good session. We are seeing a lot of questions coming in, and actually you have answered probably most of them. One of the big questions that we've got from our community out there. My name is Kelvin Mutambu. I'm the co-founder. I'm part of the co-founder of BlockCoop. Thank you for this time. So one of the questions that probably answered, which have been asked out there, was they say blockchain is here to replace the banks and the dollar. So they wanted to know whether you believe that's true, whether it's here to replace the banks and the dollar. And also to combine with that, the second question would be, where do you see the sweet spot? Is it fully centralized, fully decentralized, or the hybrid models, just like the BlockCoop models, the one that BlockCoop is building? And just to combine with another question, then I can give you a chance to answer that. Then I'll ask another one, is they say that in 5 years, how do you think most Kenyans will be saving and borrowing? So do you think they'll be saving more through the banks or through the traditional SACCOs? Or do you think they'll be saving more through the blockchain platform, just like BlockCoop, or it's gonna be the combination of all the three platforms? So if you can kindly answer that, and then I have 2 more questions that I will ask on that. Thank you.
Thank you, Mutambu, and thank you for having me. I'm really honored to be on this particular webinar to support. I'll start with the first question, and I'll request that you answer. I was looking for my pen to jot down the rest. I think I have misplaced it. So I'll request you repeat the other 2 questions. But to start with the first one, I think, not even I think, to be very honest, I'm very confident that blockchain is coming to replace traditional, mechanisms. They say blockchain is here to replace banks and the dollar. Do you believe that is true? Absolutely. First and foremost, blockchain is the infrastructure. That's very important for us to understand. Remember, you can build and make anything on top of blockchain itself. So it is not here to replace the bank. As a matter of fact, it is here to strengthen the security of banks, financial institutions, and SACCOs. Remember, the infrastructure is immutable. It cannot be altered, it cannot be changed, it cannot be hacked. So it is here to it is the next phase of securing customer funds and customer deposits. With respect to the dollar, I cannot say it is, well, blockchain and the dollar are 2 different things. Blockchain is infrastructure, dollar is currency. So the dollar might be replaced by another, I'm saying might be replaced by another type of virtual currency. By might, it might take time, and we all know the geopolitics of entrenching a currency within a jurisdiction or around the globe, you know. So the dollar might not go today or tomorrow, but from where I sit, there are conversations behind corridors of Bitcoin being the global reserve digital currency, global reserve digital currency. Because if you look at where this whole story started, it started with Bitcoin being developed and made in a decentralized way such that there is no central authority. The dollar is operated by the Federal Reserve Bank, the United States government, basically. So it is basically centralized. So we are yet to see that, but we are seeing pockets of the potential of having a digital reserve currency. And just to mention on that, countries and governments have started even trying to test on what we call CBDC, central bank digital currencies. They are also trying to develop their own, although there are challenges here and there, especially on the infrastructure, because for you to develop a central bank digital currency, it means you cut banks off. And it means for you to retain banks, you need to develop two modes. You need a wholesale CBDC model and a retail CBDC for the populace to use, and a wholesale central bank digital currency for commercial banks. So we are very early. We are actually very early in terms of blockchain adoption, and the early adopters will reap good. The other question is, where do we see the sweet spot? Fully centralized, fully decentralized, or hybrid models like what block? Hybrid models. Hybrid models. I am a fan of BlockCoop and a fan of hybrid models because we have a challenge if you have a centralized blockchain of interoperability. Interoperability. For example, if this country, Kenya, decides to develop its own Kenya coin, Ken coin, its own virtual currency. But you see, I need to send money to China if I'm a businessman to buy whatnot. It means then China has to, in one or another, their financial system has to interconnect with my blockchain network or my blockchain system. And if my blockchain system is centralized, now we have interoperability challenges or issues. So from where I sit, the sweetest post is what BlockCoop has developed their own token on, which is the hybrid model or the hybrid blockchain, because that way you can easily plug and play anywhere across the globe. And in 5 years, how do I think most Kenyans will be saving and borrowing through banks, traditional SACCOs, blockchain platforms, or a combination? Being as a Kenyan and having seen and witnessed Kenyans, adopting virtual assets faster and quicker than other parts of the world. I remember at some point in 2017, thereabout, we were actually ahead of the United States of America in terms of virtual assets adoption. Now that's very interesting. In my opinion, should there be sufficient capacity building, training, and information, and especially from regulators such as Central Bank of Kenya, the Capital Markets Authority, everybody will jump into, they'll be using blockchain platforms. There might be pockets of combination because even right now, but fiat currency will have diminished significantly. And just to justify that, look at M-Pesa. Just look at M-Pesa. When M-Pesa started, people were very conservative in terms of adopting. I mean, you would walk into a shop, you tell the shopkeeper, I want to pay you using mobile money. They'd be like, There's no way you are sending me a message. It's just a text message. You can delete it. There was no confidence. But a lot of capacity building was done. A lot of customer assurance was done. Today, everybody I'm talking to right now, I'm sure you carry the least amount of cash you can, and your preferred mode of payment is actually M-Pesa, not even cards. So 5 years down the line, and given the fact that we now have regulation, this country, we are ahead of other countries in terms of regulation. Kenyans will be saving and borrowing a lot through BlockCops or SACCOs that have platforms that are built on blockchain networks. I see there is one more from David. There is a plan to have SACCO shares traded on NSE for liquidity. I think, can you compare and contrast with the BlockCoop model apart from the technology? Thank you, David. That's a very solid question. What the NSE, in my opinion, and I've had the privilege to have conversation with the leadership at NSE, as well as the Kenya Stockbrokers Association. One of the key differences, especially with the BlockCoop model, you see the NSE, as it stands, it's Nairobi Stock Exchange, meaning you are acquiring shares for publicly listed companies and trade them within this jurisdiction, just Kenya, which technically they would have tokenized those particular firms or companies or, and so on and so forth. However, the difference with the BlockCoop model and the fact that they are using a hybrid blockchain network is that you can trade or use your shares globally. You are not restricted now to Nairobi Stock Exchange only. Now that is the biggest difference. And who doesn't want to have their shares globally? I mean, in this day and age, anyone who has an extra coin and they want to invest, they look at markets across the globe, and their preference is always wanting to put money in outside markets like the New York Stock Exchange and so, because those, you have the likes of SpaceX, which was recently, launched, and so on and so forth. So personally, I would go for a BlockCoop model. Anything that gets my tokens traded in a global exchange, not a local exchange. I'm not saying the local exchange is bad. It is very solid. As a matter of fact, maybe after a couple of years, the same way we have preference of wanting to invest in the New York Stock Exchange and buy Meta shares and whatnot, we'll be buying from Nairobi Stock Exchange once they have infrastructure and they give us confidence of putting. But I'm equivalently confident on both the Nairobi Stock Exchange and the BlockCoop model. But from where I sit, BlockCoop, because automatically you have your tokens trading globally, but with the NSE, it will just be within this particular jurisdiction.
Yeah, probably to add on that, Edwin, is to answer David's question, is number one, NSE trades from 9 a.m. to 3 p.m. every day. So the markets are closed. If you list on the blockchain, then it will be 24/7 market. So for example, right now, BlockCoop digital shares are currently trading. If we were listed at NSE, you couldn't be able to do a trade at this particular point. So that's also another advantage. The second advantage is that BlockCoop, in partnership with Norma Chain, we are actually launching tokenized stocks of the Nairobi Securities Exchange. We are going to tokenize Safaricom stocks. We're going to tokenize equity stocks. We're going to tokenize all those shares that you buy at the Nairobi Securities Exchange for the purpose of it becoming a 24/7 market. So even people who are trading at the Nairobi Securities Exchange will eventually come to our platform to buy and transact the same shares. So there is a benefit of leveraging blockchain technology to do tokenization. So we know NSE is also going to do tokenization, and I know they're in discussions around that. But there is a space for all of us to provide differentiated products, and of course the ability to be able to also lend you money against those tokenized shares. So and that's another benefit. Today you can borrow against your blocks shares. probably not as much with your NSE shares. But those are products that we're going to develop and provide future products. But as technology continues to evolve, therefore, we will be able to offer better experiences for customers. May it be NSE, may it be our normal marketplace or our BlockCoop marketplace. We will be able to offer experiences that customers will feel that they're getting value out of all these new technologies that are coming up. I think we are past time. We are 7 minutes past the 9 p.m. time. It's been a fantastic discussion. I don't know, Kelvin, the two questions you have are quick ones?
So I think I can ask, there are actually more questions coming in. Probably you can send them to Mr. Edwin later on, and then we can email the users. But then there's one question here that I would like to ask from the user. So in the traditional banking, when bank fails, the government or deposit insurance often steps in. In blockchain, if a major protocol or bridge fails, there's usually no safety net. So do you think blockchain networks can ever achieve the same systematic trust level as banks, or would they always carry the higher tail risk? So that's one of the questions, and then the rest we can always email them to them. I've also sent on the chat. Thank you. Thank you for your time.
Amazing, Kevin. That's a very solid question, extremely solid question. Now that brings me back to regulation. And I mentioned earlier, of course, these platforms being virtual in nature, you know, they are basically on the internet 24/7. They are always at risk of cyber security risks. Now, what regulation is doing, and that's why I'm very happy about Kenya and the progress we've made. Regulation is bringing about customer protection measures. I mentioned about the capital requirements. I don't think there is a business in Kenya that when you start, you are required to have 500 million, other than now this business of, for example, stablecoins as it has been described in the treasury sub-regulations, you know. So what jurisdictions ought to do is what probably the Kenyan jurisdiction or the Kenyan authorities are doing. They are saying, we know this space is probably high risk and it's still new, you know. So for you as a service provider, the moment you say you want to offer custodial services, you now want to custody, you know, safe keep assets for other parties, you need to have X amount, 150, I don't know if it's 150 or 350 million Kenya shilling, you know, as capital requirement. Number two, we are progressively growing, not only the technology, but equivalently, you know, the measures to safeguard customers. So you'll find that eventually we will have more or less the equivalent of the KDIC, Kenya Deposit Insurance Corporation, but specifically for safeguarding investors within the virtual asset space. Now, when you ask whether the blockchain networks will ever achieve the same systemic trust level as banks, I can confidently say they will supersede. There have been, let me say, arguments about quantum computing being a threat to blockchain networks. Remember, these are codes. There have been conversation about quantum computing. But the more there is quantum computing, there is also quantum resistance. So they go hand in hand, you know. So I am very confident that, well, risks will never do what? Will never cease to exist. But the management of those risks will, of course, progressively advance. And if you look, you spoke about a bridge. You spoke a bridge that was banking when a bank failed the government. Oh, I was trying to refer to one incident about there's a protocol that lost $250 million. But the way that breach was done, it was the access credentials that were actually acquired and drained that particular protocol, but not the network itself. Yeah.
Thank you very much, Edwin. This has been a very good session. I think I can see Ezra saying it's been a fantastic session. He has learned a lot, and I think everybody else has learned a lot. We'll make available the recording of this session on the YouTube channel tomorrow. If you registered for this session, you're going to receive an email that we're going to give you that. You can join the BlockCoop community on WhatsApp. We have people there. We have very good discussions. We have very good things that we discuss on that particular group. So you can join the WhatsApp group there, with the community group, so that we can be able to continue these conversations and many more. Remember, next month we have a similar session, and the topic of that session is that let me check. The session is crypto, the biggest wealth transfer, or just another bubble. So we will be able to be talking about that with our guest that particular next month. Remember also, we have the Singapore trip, token 2049 in Singapore and Malaysia, 7 days starting October 6th. Please join the community and register also on that. On that 30% discount for our SACCO members to travel to Singapore and Malaysia. Then we also have the dinner. We have the dinner at Modega Country Club coming up next month. It will be a physical dinner. Again, join the community so that you can be able to register for that particular dinner. It's a great networking session. We will have a great speaker speaking to us, and opportunity to meet people and the shareholders of BlockCoop SACCO. I can tell you there are people that you want to meet. There are people you're going to create meaningful connections, people that you're going to actually create connections that are going to be financially valuable to you. So with that said, I want to wish you all a good night and have a blessed night. And we are very sorry for taking 14 minutes of your time outside what the session was scheduled for. Have a good night and God bless you. Asante sana, Edwin Sikini. It's been a pleasure having you. And Blockchain Technologies is doing a great job. And Edwin Sikini, next time we will invite you to speak to extend that particular topic. And even speak about the work that you're currently doing with financial institutions in this country, deploying blockchain as an infrastructure for them. Asante sana, Edwin, for educating all of us.
Thank you. The pleasure is all mine. Asante sana.
Good night, guys. Bye-bye.